Good day Forex trader. EUR/USD Forex signal, oversold ahead of consumer confidence data. The overall trend is bearish and there is a likelihood that the pair will drop to 1.0600. Bullish view. Buy the EUR/USD pair and set a take profit at 1.0807. Add a stop loss at 1.0650. Timeline, 1 day. Bearish view. Set a sell stop at 1.0680 and a take profit at 1.0600. Add a stop loss at 1.0750. The EUR/USD pair crashed to the lowest level since 2020 even after the strong victory by Emmanuel Macron and the positive business sentiment data in Germany. It is trading at 1.0715, which is about 13.32% below the highest level in 2021. U.S. consumer confidence data ahead. The euro continued its bearish trend as volatility in the financial market continued. The pair ignored the news from Germany and France. On Sunday, Macron had a decisive victory against Marine Le Pen, the right-wing leader. His victory means that status quo in France will continue in the coming years. Another report came from Germany, where data showed that the country's business confidence was doing well. According to IFO Institute, confidence rose to 91.8 in April from the previous 90.8 in March. These results were significantly better than the median estimates of 90.8. Confidence declined in the retail and construction sectors although it was offset by the manufacturing sectors. Still, most companies in Germany are struggling with the ongoing inflation pressures. The next key data to watch on Tuesday will be the latest American consumer confidence data by the Conference Board. Economists expect that confidence among consumers rose for the second straight month to 108. This will be a better confidence considering that inflation is still sticky. The other important numbers to watch will be on the housing sector. The Statistics Agency will publish the latest new home sales numbers. Economists expect the data to show that new home sales fell slightly from 772,000 to 765,000. The US will also publish the house price index data that will shed more color on the health of the sector. Still, these numbers will not have a major impact on the pair considering that investors already expect that the Fed will continue hiking interest rates. EUR/USD forecast. The EUR/USD pair continued its bearish trend as the market volatility continued. On the 4-hour chart, the pair moved below the important support level at 1.0807, which was the lowest level on March 7. The Bollinger Bands have widened while the MACD has moved below the neutral level while the stochastic oscillator has dropped to the oversold level. Therefore, the overall trend is bearish and there is a likelihood that the pair will drop to 1.0600. However, the most likely scenario for Tuesday is where it stages a relief rally and retests the resistance at 1.0807. GBP/USD Forex signal, sterling getting oversold. It seems like the pair will likely have a relief rally in the coming days as bulls target the important resistance level at 1.2850. Bullish view. Buy the GBP/USD pair and set a take profit at 1.2825. Add a stop loss at 1.2650. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.2690 and a take profit at 1.2600. Add a stop loss at 1.2750. The GBP/USD price continued its bearish trend as the strength of the US dollar continued. The pair slipped to a low of 1.2738, which was the lowest level since September 21. It has retreated by more than 10% from its highest point in May. King dollar strength continued. The GBP/USD pair retreated as the US dollar continued its bullish trend as global risks rose. There are risks on the ongoing crisis in Ukraine, lockdowns in China, and fears of the hawkish Federal Reserve. There are also fears that the Bank of England, BoE, will slow down its aggressive tightening policy considering that the economy is slowing. For example, data published by the Office of National Statistics, ONS, showed that the country's retail sales declined sharply in March. Additional numbers by GfK revealed that consumer confidence declined to the lowest level since 2008. These numbers are notable since consumer spending is an important part of the British economy. Also, the retail sector is one of the most important employers in the UK. Therefore, the BoE will likely pause its interest rate hikes as it watches the recovery. The focus among investors will be on the recent economic data from the United States. The country will publish the closely watched consumer confidence data. Economists expect these numbers will show that confidence among consumers rose for the second straight month even as inflation rose and unemployment rate fell. The US will also release the latest durable goods order numbers. These are important numbers that measure the performance of the manufacturing sector. These orders are expected to have risen. Another important data will be on housing. We will receive the new home sales and Case-Shiller House Price Index data. GBP/USD forecast. The GBP/USD price has been in a strong bearish trend in the past few days. It remains below the 25-day and 50-day moving averages. This is a sign that bears are still in control. At the same time, oscillators like the MACD and the Relative Strength Index, RSI, have continued falling. A closer look shows that this downward trend is actually fading. Therefore, it seems like the pair will likely have a relief rally in the coming days as bulls target the important resistance level at 1.2850. On the flip side, a drop below the support at 1.2685 will invalidate this view. AUD/USD Forex signal, Aussie set to have a relief rebound. The pair will likely have a relief rally as investors buy the dips. Bullish view. Buy the AUD/USD and set a take profit at 0.7300. Add a stop loss at 0.7100. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7135 and a take profit at 0.7050. Add a stop loss at 0.7200. The AUD/USD pair crashed to the lowest level since February this year as concerns about the Chinese economy pushed commodity prices sharply lower. The Aussie is trading at 0.7165, which is about 6.55% below the highest level this month. Commodity prices retreat. The Australian dollar is often seen as a commodity currency because of the vast amount that it produces and exports. Some of the most important commodities in the country are iron ore, coal, and natural gas. Therefore, the Australian economy tends to do well when commodity prices are soaring. This week, however, most commodity prices have dropped sharply as concerns about demand from China. The country's government has embraced COVID-0 strategy that aims to end the virus completely. As a result, officials have ordered a lockdown in Shanghai, one of the biggest cities in the country. The AUD/USD pair has also retreated as the risks associated with the upcoming election rise. Recent polls show that the race between Morrison and Albanese will be close even as the incumbent leads. An Ipsos poll showed that Albanese maintains low approval ratings. The biggest catalyst for the pair on Tuesday will be the latest U.S. consumer confidence data. This is usually an important figure considering that consumer spending is usually the most important part of the American economy. Economists expect the data by Conference Board to show that confidence held steady in April even as most people continue to worry about inflation. They expect the number to reveal that consumer confidence rose to 108.0. The other important data will be durable goods. Economists also expect these numbers will reveal that durable goods rose by 1% in March. Finally, the US will release the house price index and new home sales numbers. AUD/USD forecast. The 4-hour chart shows that the Aussie has settled at a strong support level. It remains at its lowest level since March 15. Oscillators show that the pair has gotten significantly overbought. At the same time, the Relative Strength Index, RSI, and the stochastic oscillator have started moving sideways, signaling that bottoming could be happening. Therefore, the pair will likely have a relief rally as investors buy the dips. If this happens, the key reference level to watch will be at 0.7300. A drop below the support at 0.7100 will invalidate the bullish view.